Hi there! Learn the practical steps involved in claiming a corporation tax refund and understand how accurate company records support a smoother HMRC process.
You've been turning a solid profit, paying your corporation tax, and then your business hits a rough patch. Revenue drops, the gears of your operation grind to a halt, and suddenly you are facing a financial loss with bills to pay. The money you have already sent to HMRC does not have to stay there. You can legally reclaim past tax payments to inject vital cash back into your operations. The most common way to get cash back is through a simple overpayment. If you estimated your liability to meet your payment deadline and your final accounts show you actually owed less, the difference belongs to you. If your company loses money in the current year, you can use Section 37 of the Corporation Tax Act. This chart shows exactly how a trading loss carryback works. You take the current year's loss and shift that negative red bar backward to offset the positive green bar of your previous year's profit. The tax you already paid on that past profit becomes an immediate cash refund. You might also be owed money if you've invested heavily in innovation. Qualifying research and development can generate a payable cash credit, even if your company doesn't owe any tax to offset it against. Finally, if you operate a close company and took a director's loan, you likely paid a 33.75% tax charge under Section 455. Once you fully repay or release that loan, you are entitled to claim that tax back. Step 1 is diagnosing exactly which of these 4 situations applies to your business. The specific origin of your overpayment dictates the exact forms you must file and the legal deadlines you have to meet. How long ago you made the tax error determines which legal process you must follow to get your money back. Look at this timeline detailing your 2 options. The top path is your primary route, the standard CT 600 amendment. You have exactly 12 months from your original filing deadline to log in and submit an amended digital return. If that 12-month window has closed, the bottom path shows your fallback option. This is statutory overpayment relief under paragraph 51, and it remains open for up to 4 years from the end of the accounting period where the mistake happened. Because you are outside the standard electronic filing window, this 4-year route requires manual intervention. You cannot submit a simple digital amendment. You must invoke the relief through a formal written claim, outlining the factual grounds of your mistake and providing comprehensive documentary proof. There is one helpful exception. If you are filing a standard on-time CT 600 that shows a simple overpayment against estimated tax you already paid, HMRC processes the difference automatically. You do not need to submit a separate claim form. Once these statutory deadlines pass, your right to claim expires. Missing that 4-year mark means permanently surrendering your capital to HMRC, making timeline tracking a critical priority for every director. To start the active filing process, gather your credentials. You will need your Government Gateway ID, the company's unique tax reference, and a fully reconciled set of statutory accounts. Before you touch the tax software, verify all direct tax payments you made to HMRC during the year, including any CIS deductions suffered at source. Discrepancies between your internal records and HMRC's system will immediately flag your submission. Check your data entry carefully, because one simple omission causes the vast majority of delays. As this return interface shows, you must tick box 95 and fill in your current banking details. Without them, HMRC has nowhere to send your funds. If you are amending a past return using commercial tax software, you must physically change the return status to amended or revised, and then input the new, lower liability figures. Certain claims require extra paperwork. If you are reclaiming the 455 tax on a repaid director's loan, you have to generate and attach specific supplementary pages, like the CT 600A, alongside your main return. Submitting a perfectly configured return triggers an automated payout. Rushing the process and leaving out supplementary pages or banking data pushes your file into manual review, which turns a quick automated transfer into a month-long HMRC inquiry. Once your return or letter is submitted, HMRC operates on an official baseline target of 40 working days to process a corporate tax repayment. In practice, your wait time depends on what you are asking for. This chart breaks down typical processing schedules. Simple overpayments clear in 2 to 4 weeks. A loss carryback usually takes 6 to 12 weeks. Complex R&D claims require the most scrutiny, stretching the wait to between 8 and 16 weeks. If 6 full weeks pass with no communication from HMRC, log into your business tax account and check for correspondence. If the dashboard is empty, it is time to call the dedicated corporation tax helpline to trace the payment. There is a financial benefit to HMRC moving slowly. If they delay processing, they compensate you by applying statutory repayment interest to the funds, currently set at a rate of 2.75%. Remember this specific accounting rule. The principal tax refund is yours to keep tax-free, but that 2.75% interest is classed as taxable income. You must report it on your company's next CT 600. The steps we've covered represent the standard statutory frameworks for tax recovery. Use this overview as an educational guide to understand your options, and always consult a qualified accountant for advice tailored to your company's specific financial situation. Mastering this recovery framework allows you to retrieve trapped capital and redirect it toward funding your company's future. Whether you're auditing your payments, configuring your software, or filing an amendment, contact Pro Tax Accountant today to get your claim moving.